Morning, everybody. It's Friday, the 12th of March. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning.
Everything all right?
Yeah, all good. Yeah, not
So
bad.
Arsenal got a good win yesterday?
Yeah, well, I saw it 1-1. What was the final score?
3-1.
Oh, nice one. Yeah.
Yeah.
Yeah, it's sort of Man United held and Tottenham won, didn't they?
That's right. Yeah. So North London derby on Sunday.
Oh, right.
So, yeah, tricky one. But anyway, over to the market. So yesterday it was a bit of a mixed session. The troubles with regards to vaccines in Europe continue to show no signs of abating. The Bloomberg projection that I've seen this morning indicated that the AstraZeneca will deliver less than half as many doses as it planned in the second quarter.
Yeah.
And there's also a few issues going on in Italy, Norway, Denmark, and Iceland, where they've suspended the use of the AstraZeneca vaccine pending an investigation into a possible link to blood clots. So that's not particularly good news.
No.
Don't want to get too bogged down in that, but elsewhere, we saw the ECB's decision to front load the PEPP purchases, which is essentially buying bonds. So they will continue to do that in order to try and stay ahead of inflation worries and yield concerns. The UK GDP data came out this morning. That was better than expected. It still came in at minus 2.9 for January. Clearly, the country suffering under the weight of the COVID restrictions, which are starting to be eased in the next couple of weeks or so. How did that look on indices and commodities yesterday, Steve?
Well, we could see the sort of like, I'll start with FTSE, just focus on maybe the daily and the short-term chart. We could see a lot of indecision going on this week in the FTSE. It's really unsure where the next move is going to come from. All these look pretty bearish. You've got a hanging man candle, followed by a shooting star, bearish, another hanging man candle, and followed by a bearish outside candle. So this, to me, is like showing signs of this rally abating, and I don't know whether we're going to get this extension higher. It feels very negative this morning. On the short-term chart, we talked about this continuation formation, and again we see a shooting star on the 4-hour and another one here. It looks a bit negative, so I'm negative on FTSE. Really, sort of any real sort of pullback would target around about the 64 and a half, 64,500, 6,450, say. That's right. There's a hourly trend line that we can watch, so that would be confirmed maybe by a break of this swing low and a break of this trend line, and that you could call it a little bit of a head and shoulders pattern, but I won't go. I'll draw it. Sod it. Let's draw it. That's not. Oh, that's one of Ian's fancy patterns.
Go on, try it.
Nah, crap, whatever. So that already shows a sort of bit of a break of the neckline. Yeah, I'd sort of see if we get a break of the 6,700, the figure, then that'll put it under pressure. 66.75 next.
Yeah, I mean that one there with that lines up with the trend line, it'd be the one I think would be most interesting.
Yeah.
Sort of double impact, really.
Yeah, so break below 66.70, and that could open up a fast move to the downside. On the DAX as well, sort of negative looking candles yesterday. A little bit of a hanging man. I'd rather the tail be a bit longer, but followed up by sort of like negative pressure this morning. And again, no reason why we can't see an extension lower on a sort of poor start. Hop across the pond to the Dow. That was a bit of a better picture. All-time high posted. That's 32,665 we've got on this chart. But then again, it had the sort of like late sell-off, and it's been negative. Had a tried to regain ground up to 32,600 overnight and failed, trading at 32,427 at the moment. So on the back foot there. The 4-hour chart, not really sort of a reversal formation of such, but if we get a break of 32,350, then I think again we could sort of like open up a little bit of a move to the downside. So surely that must be Nasdaq struggled. No, it didn't. It had a decent day yesterday, but the gains have been look like being sort of like recaptured. Sorry, the losses are going to offset those gains at the moment, and looking pretty sick on the Nasdaq as well. A nice little reversal on the 4-hour chart, shooting star, and then with confirmation with a break below the 12,910 level, and that opens up potentially a move towards 12,700 to the downside before this retesting this swing low level. S&Ps, again, it's failed to get to the 4,000 level, 3,960, and we're back down at 3,900. So this previous downward trending resistance, which held quite nicely on 2 occasions, once we broke up through it, looks like we're coming down to retest it. And that's just below 3,900. So we'll have a little retest there, see what happens, and how the end of the week plays out. All this going on with a bit of a backdrop on a little bit of a perk up in Bitcoin. Cryptocurrencies had a little revisit towards the all-time highs, failed just short of it, 58,000 on this chart. The all-time high we've got is 58,367. We got up to 58,113 this morning. So that looks pretty positive. This is the long-term chart on crypto. I'm going to see this negative bearish outside candle really signaled potential for a decent reversal, but it didn't get there. And we can see that maybe plays out to a Fibonacci type move. If we can get the an impulse wave, if we start from here, and the key is that the number 4 I've just made there doesn't go back below number 1.
No, you planned that, didn't you?
No, I didn't. I just saw it there. I just thought, oh, well, the low is sort of like not.
Okay, you got a properly trained eye there, haven't you, to see that?
Yeah, and what you tend to find is this initial move. 3 is not normally is normally the longest. It's not normally the shortest. Yeah. The 2 to 3. So it should be less than here. That's sort of like shows like a level of 75,000. We can put on projection levels of where we want to see it go. A sort of like I mean, even a 161 is like potential. That like the 5th wave could be a lot shorter. And then we'll get the sort of like correction downwards. So that makes sense for me as a market. It's a new market still. There's not a lot of data to be analysing.
It's just about to get $1.9 trillion worth of influx from it as well, isn't it?
Yeah.
From US stimulus.
Well, that's it, isn't it? We still sort of see headlines nearly on a daily basis of sort of like big corporations adopting Bitcoin, or sort of, you know, at least sort of stashing some cash into there.
Yeah.
So and that will just sort
and they're
of
not
ignite.
phased by the prices either as well.
No. I mean, because the thing about Bitcoin, you can buy fractions of it. So, you know, even to hold a fraction of Bitcoin, you're part of the conversation, aren't you? You sort of like, you're talking to your pals. Have you got Bitcoin? Yeah, I'm long. You don't have to say I'm long 1 or long 2 Bitcoin. You sort of, yeah, I've bought some Bitcoin.
0.1.
And people, yeah, and that's it. And that's enough.
Yeah.
Because it is one of those things. It's you know, looking at fast forward into the future, and you know, the cryptocurrency is a thing here to stay.
Yeah.
Whether it's Bitcoin that is the one that we'll all be using in 10 years' time, or whether it's something else, I don't know. But yeah, it's definitely a currency of the future. And you know, as I've always said, when dollar when people realise what sort of poor standard the dollar is, then that they will start to adopt these cryptocurrencies.
Well,
I
hold your
don't think
horses on dollar, because I'm going to
oh,
come
you
on for
got
that. Are we ready
okay.
to switch over? You got anything else to say?
Yeah, I'll just quickly run through. Quickly have a little look at gold. Obviously, still in this bearish channel. We had the little rally that I picked up on the hourly chart. Didn't quite hit the target that I was looking for, but it got up to a nice level, 1740. So for me, that's the top side line in the sand. Above there, we sort of continue upwards. But look at the sell-off. It's I'm quite happy now that I've took profit yesterday, although I felt like I was bailing out a bit early. It would have been taking my stop out about now. So yeah,
done.
nice little sell-off overnight, and on the back foot again for our charts, showing it stayed well within this bearish channel. Potential for an inverse head and shoulders. If we break below 1700, I think we're looking at we'll be looking at sort of like a new low in this channel.
Cool.
That's it.
Thanks, Steve. Okay, so on to currencies. So first of all, looking at the baskets and the overview of the currencies, I've got a chart up here over the last year displaying all the individual currency baskets and how they've performed. And there's no denying, the dollar has been absolutely smoked compared to everything else. That's the blue chart at the bottom, the blue line. At the top, we've got the riskier currencies like Aussie, New Zealand dollar, British pound in there as well. And then sort of somewhere around the middle, we've got Euro, Swiss franc and Japanese yen. But all the way on its own down the bottom is the dollar index. Now, yesterday, we've been talking about the dollar sort of potentially improving, maybe staging some sort of bottom formation. And yesterday, this is the red line, we did see a little bit of selling in the US dollar and an uptick in the riskier assets, but it's all changed today. Now, if we look at the dollar index on the daily chart on the candles, we can see that we had this breakout above 91.60, which I've been speaking about, pretty much every day. And then we saw this continuation higher before a pullback. Now, this pullback has found support in this sort of area of support where I thought there might be some buyers willing to get back involved. That's certainly where I needed them to get back involved if there was going to be any hope of this bottom pattern actually taking shape. And what we've seen over the last few hours, potentially is some engulfing price action in and around that support, where at the moment we are engulfing all of yesterday's price action and the losses that we saw. So maybe what we do have here is a short-term bottom in the US dollar. We've seen a breakout, a nice pullback, and the buyers return. So we can look for a continuation to the upside. And in terms of the targets, I measured this swing low from the 6th of Jan to the swing highs on the 5th of February and projected that higher, and it comes in at around about 194. So that's where I'll be looking for the US dollar to move. And if we're looking at sort of Fibonacci levels as well, just to give ourselves a bit of an idea about where a healthy looking correction could get to, and I say a healthy looking correction because I think 38.2%. For me is always considered a fairly healthy pullback. We'd still be in a downtrend, although we have got a break of wedge here, and then maybe what could be happening, we could be forming maybe an even larger bottom, assuming this maybe could be a left shoulder, a head down here, and we'd be treating this 38.2% potentially as a neckline. So I'm more bullish of the dollar in the short term. I think that it looks okay technically. I wonder what that will do for everything else would be my main concern. If the dollar's pushing higher, is that because people are worried down here and we're starting to see more money shifting to safer haven assets like the dollar? Is there going to be more demand for things like government debt, which is yielding decent amounts? Is that going to sort of take people away from equities and see them move into safer haven assets? I don't know. I mean, that will be my concern with dollar strength, I think.
Yeah. I mean, that's obviously relative to the gold as well. We've seen the gold sell off, and that will continue with that sort of dollar positive price action.
Yeah. So flipping that over to euro dollar, and as you know, and as we've discussed, it's sort of an inverse chart really. So potential for a top pattern taking shape here. And again, we're trying to engulf all of yesterday's price action. So we got back above that resistance level at 119.50, but we're giving it all back today. So the sellers stepping in to send that back lower. And in terms of the measured move, or where I think potential downside targets are on euro dollar, it's down here in this band here between sort of 114.93 to 116.95. So quite a big range, 200 ticks or so. And then I guess like dollar index, and we're wondering whether or not this is actually forming a much more looking sinister top pattern, potentially. Very speculative to be calling it like that at this stage, but something to bear in mind, I think. Okay, so elsewhere, nothing really changing on Aussie yen. Yen continues to be weak, although we are approaching a retest of those recent highs. So we'll wait and see what kind of reaction we get around there at 84.95. Aussie dollar, obviously with dollar strength today, we are potentially attempting to engulf yesterday's bullish price action. That will come roughly in line with a retest of the underside of this broken channel. Keeping an eye on 78.58. If that gets, if price action gets above that, and I think I can sort of ignore that as a threat for now. But while it's still there, there is potential for more downside. I think there, potentially something forming there in terms of a top, maybe. Keep an eye on that. What we got? Euro sterling continues to bumble around these lows. A little bit of indecision around here, so clearly finding some support around that 85.40 level. If that breaks, then obviously we'll be looking for a continuation to the downside on that. On cable, so continuing to trade in a bullish channel. We saw a decent breakout of a wedge, so we'll be looking for a continuation higher there. Bit of stalling today. Keeping an eye on that to make sure it doesn't turn out to be maybe an engulfing candle. If it does, then maybe we'll see a retest of the wedge and this support down here at 137.60-ish. If we look at dollar against Swiss franc, engulfing all of yesterday's price action and looks to be pushing higher. Maybe that is a little bit of a flag. Maybe. I mean, if we look at that on an intraday basis, it probably looks a bit better. Let's get rid of these. So, that looks pretty good, doesn't it?
Yeah.
Breakout there. And I think it's a similar situation on dollar yen as well, as you can see there. Broken out of this consolidation wedge and pushing higher. So a little bit concerned about that one because it is into this long-term downtrend resistance that I've mentioned a couple of times over the last week. So I think the key level to watch there will be that high that we posted at 109.23. If it overcomes that and simultaneously breaks this trend line, then we could be in for further upside on the US dollar against Japanese yen. That's pretty much it on the currency front, I think, for me.
Nice one, mate.
Okay, so guns to head trades from yesterday. Bit of a damp one, to be totally honest. We had ideas on DAX, and you bought Euro Sterling, didn't you?
Yeah, Euro Sterling wasn't a good one.
Well, they weren't terrible. I mean, they were just small losses at the end. 7 ticks offside for you, 8 ticks for me on the DAX. So we've managed to hold on to the gains that we've made over the last few sessions, not giving them back yesterday with those losers, but hopefully we can end the week in with a nice couple of wins. So have you got anything you fancy this morning?
Well, just sort of like the sort of positivity that you've professed in the dollar, I quite like, and this sort of like lines up with the recent break of this swing low at 1708 in gold. We're trading at 1705. We've got obviously a very decent psychological level at 1700, but if this looks just pretty sort of free fall type thing, so I'm going to get on it here. I'd rather sell a pullback to 1720, but I've got no choice. I better get on it before it just collapses completely. 1705.25. I'll just round it down to 1705. Stop really. You sort of like I need at least a 15. Yeah, that would work. 15 tick stop in there at 1720, but then maybe I have to tighten that stop up because the target really would be the real level that I'm looking at is in here is 1665, but I think I'll tighten the stop up anyway. bring it down to 17.15. And maybe a more realistic target would be 1670 or 1675 probably. So let's bring it in line with the previous swing low. So that's me. I'm selling at 1705 and stop at 1715, target 1675.
Boom. Good luck, Steve. Okay, so I'm going to take a look at indices. I think I looked yesterday at the DAX, and this was my trade idea. So obviously we talked about this breakout on the DAX to new all-time highs, but we've got this what was resistance now turned support to potentially target in some sort of retest before a continuation higher. This was the trade idea that I was looking at yesterday, and come 9 o'clock it hadn't really moved an awful lot, but we have maybe seen a little bit of a breakdown in this channel, so maybe we could see a little bit more negative price action today, especially if the dollar's bid. Will we see people sort of take some profits off the table and look for safer haven assets today? Maybe. The other interesting market I think is Nasdaq. I mean, obviously it had a decent pop yesterday, but it slammed right into this 78.6% level on a short-term basis from the swing highs on the 1st of March down to the lows on the 5th. Posted a fantastic looking shooting star bang on it, and then sold off quite aggressively from there. So I don't think the sell-off maybe is finished yet with US tech, but in terms of risk reward, I think that my best bet probably still is DAX today. So I'm going to sell it at 14,500 exactly. I'm going to try and put my stop above a bit of this price action here. It's a 100 tick stop. 14,600, targeting a move down to 14,100. Let's go 14,200. Yeah, 14,200, 3 to 1 on that one today.
Nice.
Highly speculative, but yeah, we'll see, aren't they all? News-wise today, what do we got? We have Canadian employment report at 1:30. 40,000 jobs expected to have been lost, with an unemployment rate on hold at 9.4%, which is pretty ugly. And then 3 p.m. we've got Michigan consumer confidence. The index is expected to rise to 78. So keep an eye on your dollar at 3 o'clock.
Nothing.
Anything else you've seen, Steve?
No, not really. No, not a lot else going on. CMC markets up 8% yesterday. Don't know what.
Yeah, did they report? Did they?
No, I think they
IG had some numbers out, didn't they?
Yeah, I think CMC markets sort of like talked about maybe employing Signal Center as a sort of like technical analysis. So maybe that's what it was.
Yeah, we do have that impact.
They haven't, but I'd like it. I'd like to see us on there.
Definitely. How have we done on the signals this week? Is it worth having a little look?
Yeah.
A little review?
Yeah.
Just very quickly, because already done 20 odd minutes. So
I think this week's been a bit of March has been a good month. Start of the week was all right, but it's been tough the last few days. I think that's what we found. There's a sort of like the diverse swings in the indices. Have of course out a little bit overnight. Although last night I think we triggered a decent short. Is that on the week? Is it?
Yeah, that's from Monday.
Okay. Yeah.
So we've posted 50 trades. We've had 31 wins and 18 losses. Good. Yeah, so win rate's on point.
Win rate's not normally there, is it? I mean, our sort of average win rate's around about 45%. So that's like really, really good. And
yeah, so 6.5 R.
Yeah.
So this is a simulated account for anyone who hasn't seen this before, based on £1,000 worth of capital invested, risking 1% per trade or 10% or £10 per trade. So it's a fixed amount or a compounded amount, essentially. So yeah, it's been a reasonable week on that front. Our average risk reward. So for every £1 or £10 that we risk, we're looking to make £22.50 per trade. So we always make sure our risk reward is above 2 on these trades, hence we can operate at lower win rates and still be profitable. So where have the big wins come from? What's been good this week? Euro New Zealand dollars, 2.26R on that. S&P 500 2.5R, sterling Oz, and dollar Swiss has been pretty good. Euro dollar lagging.
Yeah, euro dollar's a toughie, isn't it?
Yeah.
Always has been.
Okay, cool.
Lovely. All right.
Yeah, let's have a catch up next week then. Have a great weekend, everybody, and we'll be back on Monday morning.
Cheers.
Bye bye.